So that I know that people here are active and listening. So take out names of what: Akshat, Ashish, Chinmay, Pooja, Rahul, Reena, Vikram Singh. Am I audible? Are you guys able to hear me? Yes or no?
Yes, sir.
Okay, correct.
Yes.
Okay. Okay, you don't have to call me sir. You can call me Sid or Siddhant. That's fine, right? I also turn on my camera uh, because Mora was very strict on the fact that people need to see your face. So, hi everyone, and
Yes.
sorry, someone was saying something. Oh wait, guys, this is a very informal session, but we're going to talk about something good in terms of derivatives. So you can unmute yourself. Stop me in between wherever you feel that whatever I'm teaching is not going in the right direction, or at the same time, turn on your cameras. Good job, Vikram. Keeping the spirits high. I see. Well, with that, without further ado, I'm going to share my screen. We're going to talk about derivatives, and Vikram is being bothered by someone I see. So yeah, let's start with the file. Okay. With my screen. Please let me know if the screen is visible to each and all of you. Unmute yourself. I know it's a week and it's Saturday. Everyone is supposed to go out, have fun. That's why we're going to make it very quick and learning, an eventful session. Guys, we're going to talk about derivatives. Like,
Okay.
we're going to talk. Okay, perfect.
Right.
Perfect. My ear volume is also perfect. Okay, great. So, we're going to talk about derivatives.
Dadan. Kadi nadi kiri tadi. Ada makan ini hati abbar tarakan ikide.
Can someone tell me the name of this individual? I'm not able to see the name. I don't know. Yeah. Okay. So, guys, derivatives. We want to talk about derivatives, and I'm going to give you guys an example that I got in my first class when I started with derivatives. When I was a student, I was learning about derivatives. So, and a very nice example came in front of me. And this example will only be beneficial if you and I talk. If you and I talk, then only it's going to be beneficial. Otherwise, uh, we won't have fun. We won't be able to enjoy ourselves at the end of it. So there is a diamond, right? And ignore my drawing. And this diamond is worth 7 crore, right? So I know the cost of this diamond, right? If I want to just buy this particular diamond, I can buy it for 7 crores. Let's say that for my wife or for my girlfriend or for my mother, for that matter, I decide to go and buy a diamond necklace. So let's say that it's got 7 diamonds in it. It's got 7 diamonds studded in the necklace. If I ask you what's the cost of this necklace, and you know that a particular single diamond cost 7 crore, right? Can you tell me what is the cost of this diamond necklace based on the fact that I've given you one diamond is of 7 crore? Anyone?
Maybe 49 crores or more than 49 crores.
More than 49 crore or 49 crore. So at least I know that the value is going to be at least 49 crores because 7 diamonds are studded and each diamond is worth 7 crore. Correct? So 49 crore or more. 49 crore or more. Why more? Because there might be gold chains that on which the diamonds are studded. There is making charges and then some sort of profitability over and above that. But at least I know that 49 crores I need to have in my bank account to at least give a bid or an opening price to the person who's selling me this. Right. Now, a simple and very, very basic question to you. Is this diamond necklace deriving its value from this diamond? Yes or no? Yes.
Depend on size, sir, or carats.
Forget about everything. Just keep a very normal plain example that same diamond necklace is deriving its value from something that's been studied in it, right? If I make the example even more clearer, the diamond necklace is able to derive its value 249 crores. Over and above making charge, a lot of things can happen. Over and above is something that we're not focusing on. At least 49 crores, it's deriving from how much, guys? By the diamond that's been studied in it, 7 crores, correct? Yes or no? What's on the chat? Yeah. Okay, Vikram says yes. Okay, I'll keep the chat box here so that I get a good clarity. Devesh also says yes. Perfect. Perfect. Pooja also says yes. Guys, as much as you interact, I'm gonna have way more fun with that. I know it's sometimes it's like difficult to interact. We have our own issues where we feel like, "Oh, I don't want to talk to people in the class or something." But you have to talk to me. You have to interact with me as much as you can. Otherwise, it won't. So derivative is ignore the handwriting, guys. I can guarantee you, I write at least 10% better than this in my real life. Is a financial instrument that derives its value from an underlying asset. So in this case, we can consider this diamond necklace to be derivative and the diamond to be equity or underlying asset. Equity or underlying asset. Is it clear to everyone? Yes or no? The definition is clear to you guys. Forget about what you have learned in the past. I'm asking a very simple thing, derivatives. A financial instrument that is deriving its value from an underlying asset. If I talk about a diamond necklace, it's deriving its value from the diamond that has been studied in it. Correct? This is how in actual real life market, we get to derive the value of derivatives. Okay. Now let's talk further about what derivatives are. Derivatives can be divided into many, but we're going to focus on two: futures, forwards, and you have your options. Since primarily we'll be focusing on these two, possibly because forwards and future are almost on the same line. But in this course, we'll be focusing on these two: forwards, futures, or options. Correct? Now I'll give you a real life example of how derivatives work. So as to get you a bit of an understanding of how things work in real life. So that you at least know that at the end of the day, if I do this course, if I get certified in this, how will all this effort will get justified in the future when I get into the workforce, right? When I join the workforce. So we're going to look example of futures. The formula of futures is F is equal to S naught E raised to the power RT, which basically says if you want to derive the value of forward, let's say of a stock Reliance, for that matter, if I want to get to know the future or the forward value of Reliance, I have to put in S naught, which is the current value of Reliance, multiply it by the exponential value of rate of interest and the time period. Like the time period might be 3 months or 2 months down the line. Again, I won't be getting into technicalities in today's class, just this formula. So that's so as to give you how diamond necklace and diamond is one aspect. Real life, this formula is used. F is equal to S naught E raised to the power RT to get a future value of something that I have the current value of. Is this clear? If I have a current value of something ABC and I want to know the future value of that ABC, I have to use this formula. Is it clear to everyone? Yes or no? Again, we're not going to be doing numericals. We're not getting in too deep into this. I'll just give you examples of how things work. Okay. Devesh, Pooja. Perfect. Vikram, what about you? I've learned these three names down. Okay. Now let's see a real life example of how derivatives are used in the industry. Let's talk about the example of Jet Airways. Although this company is now no longer into existence, they are bankrupt. But let's talk about Jet Airways or aviation company, if you will, or Air India. See, I feel with time, my handwriting improves. Now, what happens is, have you realized this that today I have to go to, let's say, US in like 3-4 days, or let's say 6 months from now I have to go to US. 6 months from now I have to go to US. I go on the website, and Jet Airways have a flight scheduled, and the price of the ticket is set. Everyone has seen that? Yes or no? Even year from now, they will show me a particular price. Yes or no? Yes, with so much excitement, Vikram has said. I see so many after yes, yes, dude. Yeah, fun, right? It gives us a perspective that from year on, if I have, let's say, I want to book my tickets in advance, knowing that international travel can be really expensive, I know what price I have to pay if I want to travel 1 year from now to US or to Europe or to any other country, for that matter. But have you ever asked yourself, how is the aviation industry or any flight carrier is able to set the prices so long in the future? Can anyone answer me this? Anyone? If you don't know the answer, it's fine. No pressure on that. Devesh says yes. Devesh, do you know the answer? Devesh. I hope I'm pronouncing it correctly. Okay. I'm just gonna go ahead and tell you how it happens. Economics, I hope every one of you in some part of your life, be it during your MBA or undergrad or school life, have done economics. Okay. Even if you haven't done economics, it's fine. You get two types of cost. You have your fixed cost, you have your variable cost. These two costs are the basic components of any business. In my manufacturing business, we are manufacturing locomotives. So while I am in the finance department, I know the fixed cost, I know the variable cost. My material that I utilize is something which comes from material cost, because I have a contract, I have a foreseeable backlog till 2028. I know I am in deal with the government till 2028. I have to give them a particular amount of locomotives till 2028. So I see the visibility of my end life of contract. What I don't see is that as I move ahead in the future, the prices of steel, aluminum, electrical equipment for that matter, wire, is going to move up and down as we move ahead. Non-ferrous metal, aluminum, salaries for that matter, right? All of this is going to move ahead in the future. So that's my variable cost, right? Fixed cost is something that I know it's going to incur irrespective of anything. Electricity that I have to pay, the rent of the facility that we use. So we make locomotives on government land. So we have a fixed amount of rent. Even if we are making 100 locomotives in a year, or 90 or 80 locomotives in a year, depending on the schedule, the price is going to stay, the rent is going to stay the same. Sorry, someone is on mute. Okay. Yeah, okay. Oh, perfect. Thank you. Right. So there are certain composition of fixed cost and variable cost when we are talking about a particular industry. Similarly, in aviation industry, we are talking here, right? Jet Airways example. And let's say that I know that 1 year from now, today is 14. So 14 September 2025, US tickets to Chicago is how much? Let's say 1 lakh. Okay, it's 1 lakh. Now my question to you is, with fixed costs, I know I'm going to incur it, irrespective 1 year, 2 years down the line. I have to pay this cost. I know my fixed cost. The problem arises with variable cost because it tends to go up and down. In most cases, it goes up. So how I know that charging 1 lakh rupees to the customer is going to ensure that I make profits is something that I need to figure out. Example till here is clear, yes or no, guys? Example till here is clear, yes or no? That my biggest concern is managing the variable cost if I want to make some profit in the future by charging 1 lakh rupee for a ticket. Only Divyansh. Okay, Vikram is also clear. Pooja, what about you? Reena, Pooja, I have to check the name of the participants to see if you're not sleeping. Reena, Rahul, two Rahuls are here. Okay. Ayush, Ashish, Akshat, everyone. I hope it's more or less clear to you guys. So now, as a finance person, I'm gonna be more concerned about the variable cost. I'm gonna figure out. Let's talk about the variable cost. So this is where you can give me suggestions and ideas. So this is the not sure, Sid, this is the variable cost that is involved in aviation industry. So I'll start. I'll go with salaries. Every year I have to increase it by some percent. The appraisal that happens, right? So it becomes a variable cost for me. Yes or no, guys? Just tell me, yes or no, guys? Another, I'll go with the snacks. Because if it's a flight till US, no matter even if you're in economy or premium economy, I have to give you snacks. I have to give you lunch, dinner, or breakfast for that matter, depending on the duration of the flight. Yes or no? And the prices may vary from time to time. Yes or no? I want good examples from you. What can be the other variable cost for a person in a flight business? And this is I'll tell you something. This is very important for you because you'll be appearing for interviews, right? And guesstimate questions tends to come into the picture where they ask you to create a scenario and include everything in it. So fuel cost, Vikram, bang on. Fuel cost. Fuel cost. Perfect. What about other factors? Fuel cost, salary, snacks. Is there anything? Maintenance. Perfect. Perfect. Maintenance. What about any other ideas? Any other examples? It's fine. Even if you don't know, these examples are fine. But I'm just always looking for another idea that might come my way with you guys. So maintenance is something new. Maintenance for the first time, I'm like, okay, yeah, it's also a variable cost. Perfect idea. Perfect example. Okay. So variable cost, I have 4 in front of me. Tax rate. Oh, Vikram, yes. Everyone is suffering from that tax rates. Correct. So I have few variable cost in front of me. So as a person from a financial background, the next step of this is I'll be putting weightage to the variable cost. What do you think out of all of these examples is going to impact me the most? The price change when happens or the tax rate for that matter changes. Which one of these costs is going to impact me the most? And I want everyone to think deep. 5 costs in front of me: snacks, salaries, maintenance, fuel cost, tax rate. Which of these costs is going to get most impacted when there is a price change? Think and answer, guys. Think and answer. Maintenance, according to Divyesh. What about others? Fuel, according to Akshat. Okay. Come on, guys, interact. Fuel cost. Pooja says fuel cost. Okay. Wait. The right answer is fuel cost. Why maintenance is something that's so when you're working in an industry, right, especially manufacturing or aviation industry, from maintenance standpoint, what happens is maintenance have a checklist in front of them. I'm telling this to you from a personal experience. They have a checklist in front of them, the maintenance team. And they carry the same procedure year on year over the aircraft or any heavy industry equipment vehicle, right? Unless there is some accident or some big damage that happens due to bird strike or something that happens when you are up in the air, then the maintenance cost tends to fluctuate a lot. And that too for 1 or 2 aircraft for that matter yearly. Otherwise, the maintenance team knows every year repetitively they have to do the same exercise. And even if we implement a 7% inflation on it, it's not a big cost, right? But fuel cost, fuel is something that takes a major chunk because fuel is a commodity that's traded in the market. Fuel is a commodity that's traded in the market. And as we have all realized and learned by our experience, market is nobody's friend, right? It can either go up, it can either go down, right? Again, something that causes problems to all of us in the market when we invest money. But at the end of the day, fuel cost is something that tends to fluctuate a lot. If there is a way, I can convert this fuel cost, which is a variable cost, into fixed cost. Do you feel I'll get an idea of how much the value of the ticket should be in order for me to be profitable? Yes or no? If I'm able to convert a major fuel cost, which is a variable cost, into fixed cost, I'll be able to make better price adjustments in the future to make profits. Yes or no? Think and answer, guys. No need to hurry. Think and answer. If I do this, is it going to be the case where I'll be very much sure, okay, you know what, now I know what my fuel cost is going to be throughout the year. Now, based on that, salaries I know. And on an average, I'm going to give them a 7 to 10% increment year on year. Snacks are still fine. Won't happen a lot of big change. Tax rate is still something that doesn't change very often, right? Maintenance, I've given you examples. Unless and until there is a big damage to the aircraft due to n number of reasons, nothing is going to happen. Fuel, on the other hand, it's being traded in the market. A war might erupt, which is happening. Russia says, I'm not going to give you aviation fuel. The US says, I'm not going to give you aviation fuel. Middle East says, I'm not going to give you aviation fuel due to some one or the other reason, right? And due to that, the prices of aviation fuel shoot up. In that case, the prices of tickets are also going to shoot up, but you don't see that happening. You see relatively in a range prices fluctuating. How do they do that? They utilize futures and options. What futures does is it helps you to seal a price of a traded commodity, guys, in the future. So let's say that currently, today, let's say it's $10 per barrel aviation fuel, right? Based on this, I utilize the formula F is equal to S naught E raised to the power RT. I put in 10 here. I put in the rate of interest and the time period. Let's say I want to buy it for the next 3 months. I want to buy it in the next 3 months. So I put in 3 by 12 here as the time. And let's say I get a value of future price of aviation fuel to be 11, let's say $12 per barrel. That based on my particular calculation, I feel that 3 months from now, it's going to get to a value of $12 per barrel. And I go into the market and I see that someone in the market is selling me aviation fuel 3 months down the line for $11 per barrel. He's saying that come 3 months from now, you can acquire the aviation fuel from me for $11 per barrel. Isn't it profitable for me to buy it today? 3 months in advance. 3 months in advance, I buy the aviation fuel. Isn't that profitable for me? Yes or no, guys? Yes or no? Again, this example is a bit tricky example, but if you clear this example, I can guarantee you this, how many times this example has helped me in clearing an interview, I can't tell you. Numerous times, guys. Me, my friends, everyone around me. This example has helped us clear interviews. The moment you tell this example to anyone in the industry, they're like, okay, this guy knows about what he's talking about. This person knows what he's talking about. So please, apart from Divyesh, everyone else clear on this? Yes or no? Pooja, Rahul, Reena, Vikram, it's not tough. You have doubts? Open your mic, ask me. Pooja says yes. What about Rahul? What about Reena? What about Vikram? Vikram has been silent for a while now. Tell me, guys, any issue in this example? Please repeat. Okay, for Vikram, I'll repeat. What about others? Reena? Reena, Rahul, Ashish, Akshat. Any doubt you feel here? Again, guys, small group of people. The more we talk, the better it is. Okay, understand this. Today, the value of aviation fuel is $10 per barrel. Okay, I do a calculation myself, my personal calculation I'm doing. And based on that calculation, I feel that 3 months down the line, the prices of aviation fuel is going to shoot up to $12 per barrel. And because I have a very, very excessive usage of aviation fuel throughout my entire period in the next 3 months, a $2 change is going to impact my business by a lot. Yahan tak clear hai? Is it clear to everyone? Yes or no? Is it clear to everyone? Yes, Vikram. Yes, Pooja. Yes, Veena. Perfect, guys. That's the spirit. Amazing. Now, understand this. There is a commodities website. You can go and check aviation fuel price 3 months down the line. Okay. There is a 3 months down the line aviation price that's available in the market to see, to check. I check it and I realize that someone is selling the same fuel that I have predicted is going to go to 12 3 months from now at $11 per barrel. Of course, $1 more than what today's price is, but $1 less than what I have predicted. Is this part clear? Devesh, yes. Reena, Vikram. Again, you don't have to say yes, it's fine. I'll repeat again. We have time. Like I said, if you understand this example, I promise you, you don't take the course after this. That's absolutely fine. But this example will get you to clear interviews. I am not kidding. Trust me on that. Right? I acquire the aviation fuel, and I let's say that in my case, Vikram was the one who was selling me the fuel for $11 per barrel 3 months down the line. I was like, okay, Vikram, I'll pay you $11 per barrel. Let's sign on this deal. Let's set this deal on paper. Right. Now, have I converted a variable cost, because 3 months down the line, price can be anything, into fixed cost by setting the price, by sealing the price at $11? Yes or no? Yes, Pooja, Reena, come on, guys. I like the enthusiasm. Devesh, yes. I have. Now, either one or the two possibilities can happen. Either I made a fool of myself and 3 months down the line, the prices, instead of going up, went to $9 per barrel. Can happen. Or I am a genius in myself and I realize that that the fuel prices now has gone to $13 per barrel. Instead of just going 12, it has gone even more and beyond $13. In both the cases, I don't have an option. I have to buy it from Vikram in this case for $11 per barrel because I've signed a deal. This is how aviation industry sets its prices so far down the line. They hedge, guys. They convert the price. They already convert the variable cost into fixed cost. They know that 1 year down the line how much I have to pay for aviation fuel. And there might be a scenario that aviation fuel might be cheaper during that time, but there is a very, very big probability that it's going to be more than what I am setting the price at. $11 in this case. Is this clear? Yes or no? If Vikram is in profit, so you made a loss. Yeah, Devesh, exactly. So like I said, it's always going to be a zero-sum game. It's always going to be a zero-sum game. Do you know what zero-sum game is? It's not a fun game. Because if you're on the losing end, it sucks. But do you know what a zero-sum game is now? At the end of this, someone's profit is going to be equal to someone's loss in case of futures. In this case, if the price goes to $13, I am in $2 profit per barrel. But at the same time, Vikram on the other hand is $2 less in terms of profitability. Yes or no? Zero-sum game. Vikram's loss, my profit, negates itself. At $9, Vikram's profit, my loss, negates itself. Becomes a zero-sum game. Is this clear to everyone? Only Divyesh and Reena are the one who is saying clear. Vikram, my other part is not. Oh, Vikram says yes. Pooja says yes. Okay, great. So, if you guys are clear with this, if someone asks you to give them a real life example of derivatives, always go, but you are going to pass it on to the customer. How is it your loss? No, Akshat. How will I pass it on to the customer? If let's say you have booked the tickets, let's say 3 months down the line, and today you're booking the tickets and you have set the price for 5,000. Your price is fixed. Your price is booked now. I won't be able to pass it on to you. You get what I'm trying to say? You have already bought the ticket, right? Because I set the ticket price based on what I expected the price of the barrel is going to be, or what I set the price at. I set the price at $11. Based on that, I gave you a cost of $5,000, 5,000 rupees for your ticket. Now it goes to $13. So $2 loss is coming my way. I can't ask you to pay more for your ticket. Akshay, does this make sense? Tell me, does this make sense? We can repeat it if it doesn't. Your price is fixed, right? Your price is already set. You've purchased the ticket. So you will pay no. Again, sorry, my bad. In case of $9, my bad. In case of $9, I'll be paying $11 for that barrel, which I could have acquired had I not entered into a trade with Vikram for. If you buy a ticket, okay. So Akshay, sorry, my bad. For $9, at $9, I'm making a $2 loss. At $9, I'm making a $2 loss, but I can't negate it by giving it to you, by giving it to my customer. You understand? Because the price that you have paid for the ticket is fixed. And the basis of that price, the way we set the price was because I expected the price to be I expected the price to go above $11. And I set it at $11. But in reality, it's at $9. Is this clear? Any doubts you have here? If you buy the ticket today, travel rate price. If you buy the ticket today, okay, yeah. No, sir, all clear. But Akshat, I want to know from you. Is it clear to you? If not, say no. I'll explain it again. That's why I wanted to spend most amount of time on this example, because if you take the course, yes or no, doesn't matter. But this example, if it's clear in your head, this will help you tremendously in the future. So Akshat, please tell me if this is clear, yes or no? Akshat went and asked it out and went. Okay. I don't know where Akshat is. Akshat, hurry. Anyway, guys, what Akshat asked was a very good question. Okay. And I'll talk a bit more about it. He said, but you are going to pass it on to the customer. How is it your loss? How can I pass it on to the customer if they have already booked the price? If they've already booked the price for 5,000, right? And I get to know that I could have increased the price to cover my losses. I can't do it anymore. And you see that you pay 5,000 for a particular ticket. 2 months down the line, you look at the same ticket, it has gone to 10,000 or 11,000. But your ticket price won't change, right? Your ticket price won't change. So it's very difficult for me to pass it on to the customer. The loss, it's very difficult for me to pass it on to the customer. And this is why, guys, aviation industry is one of the most difficult industry to make profit. The most difficult industry to make profits. Look at how many airlines in the past 20, 30 years have started their business and have shut down within 5 years of operation. If you look at Indigo, at the moment is flying a fleet of almost 2,000 plus airplanes in their business. Everywhere you see Indigo is there. But if you look at the entirety of their year profit that they have made, it's going to be $500 million to $600 million. Even after operating 24 hours to numerous locations with a fleet of 2,000 plus. Because in terms of profitability, it's a very, very difficult business. You have to have a certain amount of monopoly in the sky to make profits. That's why SpiceJet decided that, okay, you know what? Wherever I go, I will see Air India or Indigo there. What can we do differently to survive? Which is a very, very beautiful example that they are still surviving in the market even after making so many losses. They decided to operate on routes which are less traveled. Right, where Indigo and Air India was like, we're not going to invest too much money on these routes. They are not that profitable. What else they did? So what happens is when you are landing your plane in plane carriers, you pay a rent to the airport. So if an Indigo plane, let's say ABC model, is sitting in Delhi's IGI airport for the night, in the morning it has a flight. You have to pay the rent for that night to IGI. Okay. Now, if I park my plane in Guwahati or if I park my plane in Delhi's IGI airport, but can't you have contract with fuel provider based on future price prediction? Of course, but can't you have contracts with fuel providers based on future price prediction? You do. That's what we did, right? That's what we did. $11. That's what I did. Based on my calculation, $12 was, as a finance person, when you're working in treasury department for that matter, you will see that, oh wait, $12 is what the price is showing in my calculation, and $11 is something that a person is selling. I'm going to set the price with the fuel provider for $11. That's what you did, right? Based on your price prediction. That's what I did. I set the price at $11, but predictions, these are basic analysis and prediction. They can't be always 100% right. What if due to something that happens, the war stops between Ukraine and Russia, they say sorry to each other, and bam, Russia is supplying fuel to all over the world and people are buying it. So you paid 11, set the price. Yes, bang on action. Now you're on the right path. Because now I've converted big chunk of my variable cost into fixed cost. Now I know how much I need to charge in order to make it a profitable business. Okay. So how SpiceJet survives? SpiceJet parks their plane in outskirts of different small airports where they don't have to pay a big amount of rent. Okay. So that's why, and another why this industry is so competitive with Akasa Airways. They came, Junjunwala's airline that came into the market. Now, they were very keen on offering low prices to the customer and flying the Boeing 737. Good airplane. That is the point. How will price fluctuation affect you in the future? Again, Akshay, price fluctuation will affect me in the future. I have set the price. The fuel provider is giving me the price of particular barrel for $11. One barrel for $11 because we have set the price. In reality, on that date, 3 months from now, the actual price of a barrel is $9 in the market. But because I set the price with the fuel provider very well in advance, I have to pay him $11 because we are in a contractual obligation. Now, had I not been in that contractual obligation, I could have acquired the fuel for $9 straight in the market. But since I'm in a contractual obligation, I have to acquire it for $11 per barrel. Similarly, if it goes to $13 in the $13 per barrel, the fuel provider will have no option but to provide me the same barrel at $11, even though from the other 2-3 other customers, he might be charging 30. Does that make sense? Akshay? Yes, perfect. Don't worry, we'll get into too many examples because derivatives is a very, very beautiful field. And like I said, the real life applications of derivatives, amazing, tremendous. I hope someday most of you work in treasury as well. Treasury business is where you see the actual use of hedging derivatives a lot. So I hope this example is clear to everyone. Now in this course, I don't want to take a lot of your time. 45 I said, I guess 45 minutes I've taken. In this course, we'll be starting with what equity is, the basic building block. Then we're going to go slightly over. Let me show it to you. No, I guess I closed that. Yeah. Everyone is, this is visible, right? I'm not going to make you go through the brochure. What I just want you to know and see is we're going to start with equity derivatives of business model. We're going to start our journey here. Okay. And the date and everything related to this will be given to you by tomorrow or by today at max. We're going to start with equity derivatives. This module is going to take us 4 to 5 class to complete. 4 class, I am assuming. Maybe we can do it faster if you guys have that pace. I don't want to rush it. Then we're going to go into derivatives market. This is going to take 5 to 6 class. Okay. But by the end of these 2 modules,